G'day, welcome to the Australian Property Podcast. I'm your host today, Pete Wargent, and we're on a mission to become Australia's most trusted property podcast. I'm thrilled today to be joined by Cameron Kusher from REA Group, one of Australia's top and best known property market analysts. Cam, welcome. It's great to have you on.
Thanks for having me, Pete.
Now, we've spoken before, Cameron, and I guess most of our listeners all know who you are, but just want to give us a 30-second rundown on who you are, your background, and what you do?
Yeah, sure. So I'm the Director of Economic Research at REA Group and PropTrack business there. We're a property data company. Obviously, most people will be fairly familiar with realestate.com.au, which is the biggest brand of the REA Group, but they also own a mortgage broking business, the Flatmates website, Real Commercial, a number of websites. And my job is basically to look at the housing market and the trends and talk about what's happening in the housing market.
Thank you. Now, you might be able to answer this question. I'm sure you can. So PropTrack actually has a housing market index now, doesn't it? So previously, people looked at some of your competitors' indices. So PropTrack, that now has a monthly housing market index for things like prices and rents and so on.
It definitely does. And I think the key difference between the PropTrack Home Price Index and some of the other ones is that it is available monthly at the end of the month, and it is fully revised every single month. And we do find that does tend to make a little bit of a difference in the reading of the market, particularly when there's strong momentum one way or another, whether that's prices falling or prices rising. Getting that revision to encapsulate all of the data is really important. It does tend to tell a slightly different story.
Yes, because sometimes the different data providers have different results. I remember some of the blog posts years ago explaining all the different methodologies, and it could sometimes make your brain hurt a little bit. But I think certainly the PropTrack index has been slightly different in terms of the depth of the downturn. I guess some of the other providers saw sort of bigger drops and then bouncing back much more quickly. But I guess there's no one specific way, I suppose, to measure the housing market activity.
There's definitely not. And I think if you look at most of the indices, the story is very similar. The difference is the magnitude and speed of things. And that can just come down to differences in methodologies. Obviously, some of them are monthly unrevised. Ours is monthly revised. And then you've got others that are quarterly that do take in more data, but they're available more slowly or less regularly than those weekly or monthly indices are.
That makes sense. So, Cam, one of the main questions I wanted to get you on to discuss. So the environment at the moment, particularly for people like me who work in buyer's agency, there's just nothing for sale. There's properties on the market, but actually when you get a property that's ticks a lot of the boxes, as they say, or is in a reasonably good location, maybe something that doesn't need too much work, there's buyers everywhere and all over it. And there's just not very much good quality stock around. So I know this can sometimes happen at various points in the year, but it seems to be ongoing and quite chronic at the moment. So I guess my first and main question to you is, why aren't people listing their properties more? And is there any sign of that changing? Or if not, when is it going to change?
Yeah, it's a good question. It's one we struggle with. Obviously, the REA Group, realestate.com.au, is largely a listings portal. So people putting properties on the market is pretty important for our business. If we look at the number of new listings in April, they were down 23.5% from last year. Total listings are up 5.6%. But if you think about how people look for property, you start your journey and you look at everything that's available for sale, and you either are interested in what's available or you're not. But then you're hanging out for those new listings to come onto the market if you've decided you don't want to buy what's on the market. And the real challenge at the moment is there's so few of those properties coming onto the market. In terms of the reasons why, I think obviously the big one is that interest rates are changing every single month and people are just unsure whether it's a great time to list or not. In saying that, we have seen that rebound in prices so far this year. We've also seen quite a significant upswing in the number of sales occurring as well. So there's definitely buyers back so far at the start of this year. Some of the other feedback we're getting is people know that they can sell their property, but there's nothing for them to go to. So it's like it becomes this self-fulfilling prophecy that, yes, I can sell my property, but what do I buy? Where do I go next? I think one of the points that's not spoken about so much as well is the tightness of the rental market. Because of where interest rates are now, a lot of people are being told they have to sell their property before they can buy, which means there's a need to transition through the rental market. And because there's no stock available in the rental market, again, I think that's discouraging people from listing, because especially if you've got an area that you're living in, you want to stay in that area, your kids are in school, you don't want to move outside of the school zone because then you might have to change schools and you don't know when you're going to be able to get back in the market. So obviously the tightness of the rental market's a real challenge for renters, but it's also discouraging people from bringing their properties to the market because they have to transition through that market.
That sort of does make a lot of sense. So yes, certainly the rental market is pretty tight. We might come on and talk a bit more about that later on. I think when I look at what's happening overseas in countries like the US, where most people are on sort of long fixed rate mortgages, and suddenly the mortgages have gone from 2% to 7%. I can understand why the market's kind of frozen up over there. I think if you'd have asked me a year ago, though, in Australia, and if you just said, well, the cash rate target is going to go from 0 to nearly 4% in rapid time, I probably would have expected a lot more fallout. And yet here we are, as you said, prices rebounding and people aren't selling. I guess, we're pretty close to full employment. Everyone who wants a job, by and large, has got one. Very low vacancy rates. So that all kind of makes sense. And maybe people have seen previous downturns and the market's just rebounded. So this time they're just going to sit things out. What about the seasonality factor? I know that quite often they talk about the spring selling season in Australia. Do you think that listings would start to pick up as we get round towards that time of year?
So we're very cautious as a business not to forecast listings, but what I guess I can say is that if we look at last spring, there's no bounce in listings last spring. So basically, ever since interest rates have started rising, we've been seeing this drop off in the number of properties to the market. Now, people can only hold off putting properties for sale for so long. So I think there will be a point that we do start to see more properties come onto the market. When we're talking to real estate agents, they're saying to us that the message they're trying to get to their potential vendors is put your property on the market now, because there's a lot more buyers out than there were, through last year. Prices are starting to rebound and there's not a lot of competition. So that's really the ideal situation to sell. I think the problem, though, is, as you said, the seasonality. When we get to winter, like we're just about to enter, people say, we'll hold off until spring. And I guess this spring, you're not going to have a lot more competition. We're not going to have seen another couple of interest rate hikes in the market, a lot tougher. I do think we'll see more stock coming to the market on spring, just because we usually do. But a lot more supply on the market could actually lead to prices starting to fall again, especially if it comes on the back of, increased mortgage stress, a few more interest rate hikes. So I think people that are thinking about selling need to think long and hard about, when's the right time to sell and what are the conditions you want to sell in. And I think they would discover that what we're seeing right now is the time that you should be trying to sell, rather than hanging on for the uncertainty of what might happen in the next 3 to 6 months.
Yes, it's quite hard to actually compare some of the year-on-year figures. So it has been in recent years, not just in property, but in all kinds of economic data, simply because it's been a weird 2 or 3 years with lockdowns interfering with the usual seasonal patterns and so on. I saw some analysis from Tarek Brooker this week, and he was talking about the total number of advertised dwellings, but then he was looking at almost on a per capita basis. So I think his point being that, if you went back, say, 10 years ago, obviously the population of Australia was quite a lot smaller. This week went through 26.5 million. So would you generally expect there, as the population grows, to be actually more properties in total advertised on the market?
You would think so. It's something as a business, I think we've been struggling to grasp why that isn't the case. And I think it really talks to a few things. I think first, if we look over the last decade or so, there's been a lot of incentives for people, particularly first home buyers, to purchase brand new properties. And we have seen a big increase in construction. So if people are choosing buy a new home rather than an existing home, then perhaps that is contributing to fewer properties on the market. But I think more generally, it's just the case that the transactional costs with the property have increased quite significantly over that period of time. And we talk a lot about stamp duty and land tax, and a broad land tax would capture everyone. Stamp duty punishes those people that have to move on a regular basis. So basically, if you're in a principal place of residence, the easiest way to avoid any tax or any penalty for owning your own home is to not sell. So I think that's a big part of the argument. And we particularly see this in the more affluent areas of the major capital cities, that people hold on to their properties a lot longer than they do in the less affluent, the cheaper areas. And that's really, I guess, because a lot of people are using those cheaper areas as a stepping stone into the market and are more likely to turn over that stock on a much more regular basis than if you've got a large house in the inner city that really meets all your needs. So we definitely think stamp duty is one of the issues, and other transactional costs are an issue as well. But also the big surge in new housing construction over the past decade has contributed to your properties coming onto the market too.
Yeah, you've explained that point beautifully, actually. That does make a lot of sense in terms of the second-hand property market, not as much for sale. And certainly the stamp duty, I suppose some of those taxes were introduced with much lower property prices in mind. And now the idea of writing a six-figure check for people to trade up, not very attractive. A lot of people would probably rather stay put and try and renovate if they can. On that point, on the construction part of the market, so we had the big building boom around a decade ago. Now, construction costs have gone up a lot over the last 3 years or so, especially some of those medium density developments. So what's happening in the construction sector with new housing supply? I guess the general theme was there was a lot of properties under construction and we had real shortages of materials and labour. So what about the pipeline of properties still to come onto the market? Is that now starting to contract, or is there still a lot still to be built?
So there's still properties under construction nationally. It's been pretty much every quarter a record high. The most recent quarter, which is this year, was slightly below the all-time high. So there is a lot of stock under construction still. And basically the reason for this is a house used to take 6 months to build. Now, a builder will put down the slab and might not come back to that house for another 18 months because they've got so much work on or they can't find the materials. Equally, a high density development might have taken 3.5 years to build now, but because of labour shortages and cost challenges, that would take 5 years. So there's still a lot of stock construction. What is starting to happen though is the pipeline of new construction is really thinning out. Again, we've only got the data up to December last year in terms of commencements, but that's fallen for each of the last 4 quarters, 5 quarters rather. So it's trending much lower. And then if we look at the monthly building approvals data, we've seen that that's weakened off quite significantly. Now, why is that reducing? I think there's a few reasons. The materials that go into housing construction are up about 11.5% over the past year. A couple of quarters ago, they were rising at 17%. So it's very hard for a developer to tell you, A, when your property is going to be delivered, and B, what the final price of that property is going to be. So I think that's discouraging people from going and buying brand new properties. You've also got prices have fallen in the established market, but they're rising in the new homes market. So you've got this widening gap between what existing house costs. And I think for a lot of people, it's just, well, if I buy something established, I know what it is. I can walk in now, and that's the preference for a lot of them. Now, we're still seeing from our site a lot of views for new homes. We have seen a pullback in inquiry, and I think it's just the case that at the moment, the price uncertainty is really discouraging people from buying brand new properties. When you talk to developers, they say, we can get pre-sales and we can get sales when the stock is completed, but it's very difficult to get any interest in a project while it's under construction.
I was at a conference about 12 or 13 months ago, and I was talking to a manager who manages development projects for clients, and I sort of was chatting to him, and I was asking whether he was recommending to clients to hold off because construction costs were so high. And I was thinking, well, maybe they might come back down again. And his view was, well, the construction costs, there was still a lot of pressure on prices. This is a year or so ago. And generally speaking, construction costs can be quite sticky. So they go up, but they never quite come back down again. And a year on, well, he's been proven correct because costs haven't come down at all. And it did occur to me just driving around, been on holiday over the past week, and just around some parts of the country, I was thinking, well, actually, some of these established properties are probably they must cost less than they would the replacement value because building costs are so high. Do you think construction cost pressures? Do you guys measure that, and are they starting to ease at all? Do you think they might come back down, or is that are they still relatively high and under pressure at the moment?
We don't really measure it as such. We look at the producer price indices data, and we can see that the rate of growth has come down. The other thing we do is talk to a lot of developers. Now, when you talk to a property developer, they're pretty adamant that those costs aren't going to come down, which is interesting because you've got this widening gap, as I said, between you and existing. But also, if you've got a lot fewer properties coming through the pipeline, then you're going to find that a lot of tradies are scratching around trying to find work in probably 12 to 18 months' time when we do get all the projects to completion. So whilst they're generally fairly adamant that prices won't come down, I can see that tradespeople are going to be looking for work in a year or two's time, and maybe that does lead prices to fall. I guess the question for developers are, if people costs come down, are they going to actually reduce prices on their homes? Maybe they won't. But I can see some of those cost escalation pressures certainly easing as we work our way through this big backlog of properties that are under construction.
It's one of the funny things with inflation that prices always seem to go up very easily, but they don't necessarily want to come back down quite so adamantly. Let's talk a bit about the rental market, which you mentioned just before. I guess there's all these different ways that people measure rents. There's an asking rents index out there with one of the private data providers, and then there's I guess you guys have got your rental index, and there's a couple of others, and then there's the official inflation figures from the ABS, which are showing lower increases in rents. So I assume that's just to some degree a lag effect because I guess newly advertised properties on the market are only a certain proportion. It takes time to flow through to the official inflation figures. But what are you guys seeing? Is the rental market still tight in the capital cities? Is there any sign of any changes there?
Yeah, it's as you said. I think what we see with the CPI data is that it does take into account all rents. When you're looking at advertised rents, it's a relatively small cohort of all those properties that are available for rent. So you would find that CPI does tend to lag. In terms of rents, so if we look at advertised rents over the last 12 months, we've got them up 13% across the capital cities, up 4.4% over the regional markets. So we're continuing to see quite an escalation in rents in capital cities. We've seen double-digit increases in advertised rents in Sydney, Melbourne, Brisbane, Adelaide, Perth. We're starting to see rental pressures ease in Canberra, Hobart, and Darwin. If we look at other metrics, though, so in terms of rental, the number of rental properties advertised, so nationally, the number of new listings was 2% lower than a year ago in April, but the total number of properties available for rent was down 0.5%. And again, we can see some disparity across different parts of the market. So in regional markets, the number of properties available for rent up 20.8% from a year ago. In the metropolitan markets, it's down 16.5%, but that's really being driven by falls of more than 15% in Sydney, falls of almost a third over the year in Melbourne, and falls of almost 20% in Perth. Elsewhere, we've seen moderate increases in rental stock in Brisbane and Adelaide. The number of rental properties is up, listed for rent is up 66% from a year ago in Hobart, 36.5% from a year ago in Canberra. So it's a really mixed story. Supply's increasing a little bit in Brisbane and Adelaide, but it's still very low on a historic basis. And things are continuing to tighten at a rapid pace in Sydney, Melbourne, and Perth, but it's much more prevalent in those inner city areas. If you break down the city into SA4 regions, for example, you can Sydney, the number of properties available for rents climbing in Balkan Hills and Hawkesbury, climbing in the outer southwest, climbing in the Central Coast. In Melbourne, it's only those three inner SA4 regions really that's driving the reduction in increases in places like the Mornington Peninsula and pretty small falls elsewhere across Melbourne.
So is this basically a reversal of what we saw during the pandemic, where everybody moved outwards, and now they're kind of reverting back closer to the office, closer to Sydney?
That's exactly right. You know, people that moved away during the pandemic are now moving back. Now, partly that's maybe the lifestyle where they moved regionally wasn't quite what they were expecting. I know you live on the Sunshine Coast. I've heard a lot of anecdotes from Melbourne agents telling me that, you know, people moved to the sunny coast because they love going to Noosa for 4 weeks a year, but it was a bit of a different story. Bit of living there full time, you know.
Yeah, the rental market is softened. Yeah, for sure.
Yeah.
There's I think partly as well just a pushback because the rents went so high. You know, there's properties on the market for $2,500 a week and, you know, $2,000 a week, which, you know, they're great properties. Don't get me wrong, but when you add that up over the course of a year, for a lot of people, that's just not sustainable. I think I think people were prepared to pay it for a short period during the pandemic, but now people are like, well, hang on. You know, I want a bit more for my money here, and it's definitely calming down. And I'm sure that's probably been mirrored in places like Mornington, the Blue Mountains. I was down the East Coast this week. You know, some of those far North Coast markets in New South Wales, the same. They're definitely a lot quieter than they were. Cam, I had a question for you. This is actually quite a big subject. Housing supply is all over the media. One of the sort of the silver bullet recommendations is the build to rent sector, and it's practically every day in my inbox there's another institution raising funds to go into build to rent. In Australia, we've got Stockland, Mirvac. I think Mirvac are planning 5,000 units, Lendlease, Scape, and then also institutions from overseas like Greystar, Sentinel, I think Grocon. You know, there's a whole range of people getting into the space. So at a high level, let's talk a little bit about what build to rent is, and then let's get your views on what you think might actually happen. So I guess build to rent, as we saw in the United Kingdom now, it's about 20% of new housing is built to rent, and in London it's about 40%. So it's really taken off almost exponentially. And I guess what we'd probably expect to see in Australia is sort of new unit developments close to transport hubs, but where people can basically sign up for like a 3-year lease or something like that.
Yeah, exactly right. I think that's basically the crux of the build to rent sector. It's something we haven't seen too much of in Australia historically, but it's a growing sector of the market. We saw in the federal budget that they've offered incentives to make build to rent more attractive, and we know state governments have done that as well. I think the challenge with build to rent is, yes, it's a new source of demand, but if you look over the next sort of 5 years, it's still a very small supply of additional rental stock. I think I was at a presentation, about 26,000 units scheduled to be delivered over the next 5 years or so. So it's still pretty growing, obviously, but I don't think it's the answer to the situation we're in the rental market at the moment. The other thing with the build to rent sector is that it's often priced at a premium to established stock. Now, if you build enough of it, you'll bring down the price of the older stock. But again, we're nowhere near the magnitude of build to rent or the scale that's going to bring down prices significantly at the lower end of the market. I think there is a bit of a missed opportunity whereby we're offering all these incentives for build to rent, but we're not kind of saying to these providers, you know, you need to provide some affordable rentals on these projects as well. I think the other as well is a big corporate actually going to give you a better outcome as a renter than, you know, an individual or couple that invest in a property, and it's really their only investment outside of their own home. Historically, we know that most of the housing in Australia has been provided by individuals that, you know, buy rental properties and lease them out to people. Yes, you're going to have the option to have a longer tenancy in a build to rent, But overall, when something breaks, when something's not working, are you going to get a better outcome? When rents come up for renewal, are corporates going to be maybe as kind as some investors are and not push through significant increases in rents? And I guess only time will tell, but I think that's certainly some of the things that people should be a little bit cautious about in this sector.
Yeah, that's it's very interesting. I think just a couple of observations from what I've seen in London. I think on the plus side, the security of tenure, your landlord's not going to sell up after 6 months and tell you to move out. So I think that is appealing for some people, especially young professionals who maybe want to work in the same job for a few years in one location. I think landlords are generally institutional landlords are unlikely to evict an elderly tenant just because of the bad press. I think there's certainly that element to it. I think there's been some downsides though. I think in London, I saw there's a project in Elephant and Castle, but it transpired that something like 4,000 social housing units have been demolished. And yes, there was new build to rent coming up, but then there was just enormous pressure on social housing, and the waiting lists in the borough are just unbelievable. And I suppose another thing I saw, I was tracking a project I was interested in Manchester, where the initial net rental yields for the institution, I probably won't mention the landlord, but it was about 3.6%. But they were sort of analysing it, and they said it had gone up to 3.9, and next year they expect it to go to 4 because the rents are going up. And I thought, well, this isn't really an affordable housing solution if the goal is just to push up rents ahead of inflation wherever possible. So I suppose those are some of the things that might be worth watching in Australia. Now, I did have a question about whether, with all of this capital being raised, whether in 2 or 3 years' time we might suddenly get this huge glut of build-to-rent apartments hit the market. But it sounds like, from what you said just previously, that the pipeline isn't yet at least big enough in Australia.
No, I don't think the pipeline's big enough yet, but certainly there's the potential to get to that level. I think the other point is, historically, a lot of the apartment projects in Australia that were built to sell were targeted at investors. They delivered a lot of 1 bedroom, 1 bathroom stock, or 2 bedroom, 1 bathroom stock for that investor market. If you talk to developers at the moment in terms of build to sell, they say they can't make those projects stack up. They basically say they make a loss on 1 bedrooms, and it's very hard to break even on 2 bedroom, 1 bathroom stock. So I think it's almost like build to rent will replace that investment stock that we used to get in the build to sell market. Again, whether that's a good outcome or not, I'm not sure. But it certainly looks like it's going to be a lot harder for developers to create a build to sell product that would be attractive to investors. And I guess for people that are looking to invest directly in property, it's going to drive them more to the established market rather than that new market.
It's a good point. Previously, we had a lot of the new apartments used to sell to non-resident investors or foreign investors, especially from mainland China. But with the introduction of the stamp duty surcharges, that kind of went away. So maybe this will replace some of that rental stock. I think if you build enough of it at a big enough scale, then, as you said, it might just take the pressure off the rental market elsewhere. Generally, I guess when developers are looking to build, they want to see a double-digit return on capital to compensate for the risk. So I've seen a lot of these projects in Australia talking about 150 units and 200 units, but I think what I've seen overseas anyway, really, it's the big-scale projects, maybe 500 in a development or 1,500 in a precinct. They're the sort of things that scale up. I think it's pretty difficult to deliver profitably in some of those smaller developments. Cam, you mentioned just before the issues with stamp duty and how that's gumming up the market to some degree because people don't want to pay the transaction costs of moving. There's been quite a few discussions in recent times about a switch towards a land tax. And in fact, just last week, the Victorian budget was actually talking about an increase in land tax. So there's a couple of different things there. Obviously, the Victorian government had a budget that was in deficit. They've introduced a higher land tax to balance the books. Do you think that will have some impacts or implications for the housing market in Victoria?
Yeah, I do think it will. I think So broadly, we support moving to land tax, but I think these, small changes rather than an overhaul of the whole tax system and looking to remove stamp duty and replace it with land tax just complicate things. It's, over the last 24 months or so, there's been this real demonization of property investors. And property investors are there basically because the government won't provide housing for people that can't afford to own their own home. So it's basically up to the rental market. The implications of that increase in land tax for Victoria, in my mind, is going to be twofold. The first one will be, interest rates have already gone up a lot over the last 12 months. Prices have gone up a lot. So people are now getting their land tax bills and seeing that, the rates and charges on their property is going up significantly as well. And, Dan Andrews did come out and say, well, you can claim the cost of the additional land tax back off the federal government. The reality is you've still got to fork that money out. You've still got to find that money. And it's not like you get all of that money back when you claim as well. So I think it will potentially push some people to exit residential investment. And we've already seen over the last couple of years a high number of people exiting the market. And the other one is people have a choice where to invest. Victoria's already got very low rental yields. It's already got some of the highest stamp duty rates in the country. I think it will discourage people in the future from investing in Victoria for opportunities elsewhere where you don't have these impediments to owning an investment property, but also where prices are cheap, duties lower, and rental returns are better. And if you just go to places like Western Australia, you go South Australia, Queensland, you definitely get more attractive rental yields and potentially some more attractive capital growth potential than what you're getting in Melbourne and Victoria at the moment.
One of the challenges, it seems to me, for prospective investors or landlords at the moment is that the rules seem to be changing every 5 minutes. Yeah. Certainly in Queensland, there seems to be a new rule proposed every couple of weeks, and then it gets changed or rolled back. And it's difficult. These are supposed to be, 10 plus year investment decisions. And if you get sort of surprises being sprung on you every couple of weeks or every month, it's very difficult for people to commit. And that's obviously not helping the rental market at the moment. Do you think we might see a switch then away from stamp duty towards land tax over the medium term? Would that have to be driven by the federal government potentially?
Yeah, I think it's going to have to be driven by the federal government. We saw New South Wales try, and then the coalition lost the election, and now Labor's talking about rolling back changes. The only market that's doing it successfully, seemingly, is the ACT, and they're doing it over a long period of time. I think it's an important piece of reform, and I think particularly from the big states, the one that can get there first, there's a real competitive advantage in offering people the option to pay land tax or stamp duty, or ideally land tax universally. But yeah, look, I don't hold out a great deal of confidence that's going to happen, but certainly I think it's the right move and something we should be looking towards moving towards.
What's the pushback? I guess the benefits would be labour force mobility. People can move around more, so there should be productivity gains from that. And I suppose from a government perspective, you'd be getting a much smoother tax take instead of lumpy stamp duty tax take, which is always up and down with the cycle. What's the point against the change? Is it simply that the takings have been too good from stamp duty and it's difficult to give up?
I think it's that, and I think it's also the potential lost revenue upfront that you get by making the transition. But doing it the way the ACT is doing it over a 20-year period can smooth that out. I think for a lot of government, Victoria is a great example of this. They're in a lot of debt. If it could solve the debt problem, I think they'd do it tomorrow. But I think there's some challenges with making that transition, and it doesn't necessarily make the books look any better than they currently do. That's why there's a real reluctance to make the change. But hopefully that, if the housing market is softer for the next few years, state governments are going to have a lot less revenue to play with, and maybe that will start to force their hand. But I guess we've been in this position a number of times before, and we've never actually been able to make that transition away, at least in one of the big states, from stamp duty and toward land tax.
Politics always seems to get in the way. Cam, it's brilliant to get your thoughts on all of these subjects. You can just cut through the noise so well and so articulately. Before you go, I guess I should ask you this question. Is there anything you think that people should be talking about in the property market at the moment but isn't getting any coverage?
I think probably the one getting a lot of coverage at the moment is particularly in this new housing space, and the fact that we're trying to deliver 1 million new homes over the 5 years to 2029. That's the ambition of the federal government. But we don't have the capacity to deliver the housing stock we need. I was recently in Western Australia, and builders were saying to me, why would you do a trades apprenticeship when you can go up to the mines completely unskilled and earn $150,000 a year? I think it's all great to have ambitions to build housing, and that's something that we should aim for, but no one's really talking about the capacity to deliver the housing we need. One of the other pieces of feedback we often get is there's so many big infrastructure projects going on around the country that state governments are, attracting the people that would have been building houses to go and do these infrastructure projects because, the payment terms are better. There's a lot of funding there. Costs are not as much of a concern as they are in a small margin business like home building. So I think that's something that to be addressed that no one's really talking about very much.
It's a good point. I guess as somebody who went to work in the resources sector during the mining boom years, and people were talking about Dutch disease, and I think that was probably drawing a bit of a long bow, but nevertheless, there are some conflicting challenges there. If we're building infrastructure, resources projects need more construction as they extend their life on some of these big projects. And at the same time, we're trying to build 1 million homes plus in 5 years. That's a lot of materials and a lot of trades that's needed and a lot of labour at a time when things have been stretched tight all over the economy. So, yeah, it would be interesting to see how all that plays out. Cameron, thanks so much for coming on. If people want to find out a bit more about your work and REA's reports and the prop track indexes and so on, where should they go to for more?
Yeah, so there's a website called REA Insights that hangs off realestate.com.au. So if you just Google REA Insights, a lot of the information is available there. Follow me on Twitter at CM Kusher, or talking to the media and out there. So there's great. Of course, come to the realestate.com.au website and have a look at your property, have a look at what's available for sale, and have a look at all the stats and information about properties and suburbs around the country.
Fantastic. Yeah, there's some great insights there. And of course, realestate.com.au. I spend way too much time on that website planning my move to the Whitsundays when the Powerball win comes in. So, yes, brilliant. Thank you, Cam. Thanks so much. I look forward to chatting with you again sometime soon.
Thanks, Pete.
There we go.
Brilliant.
All good. That was good.